Okay, everyone, I apologize for the lateness of this video. It's about 9:37, 9:36, May 7th. The last video, I managed to forget some important details about the position, and literally just as I was going to send it out, I realized I needed to add a couple more details. So here we are on the re-recording. Let's get some perspective here. We're looking at the market trading inside of the trading lane. On the upside, we're looking at 2.0650. 2.07 based on resistance, remember, back into the 70s. Remember, we've got to go back that far simply because we're at a 15, 16-year high. And from 1978 all the way to 1991, the pound had not traded at these levels either. So the last couple of times the market has gotten up to this level, it has backed off considerably. So we've got to keep that in mind. That there is the possibility of the pound taking a huge dive from here. On the downside, if the market does start to break, I'm looking for the midpoint of this consolidation area back here, about 96.10, possibly if down as low as 94.25. If the market gets going quickly, which it can. I mean, you can see here that the market can make a significant price move in a very short amount of time. Let's go down to the 4-hour bar here. You can definitely see that this flag pattern is well defined. Although the market has poked out a couple of times on some false breakouts, I am still considering this to be a valid flag pattern here. One thing to consider, though, is the longer this flag pattern goes, the less valid it does become for a continuation pattern. Just keep that in mind. Plus, since this thing is pointed down, the longer this thing goes, then we're pointing into a short-term downtrend. Right now, we're still marking time sideways because we're mixing our highs and lows. Remember that. So we're really looking at more of a sideways action here instead of a downward action. Let's go ahead and look at the hourly bar. We're not seeing a whole lot of setup on the hourly bar yet. So we're not seeing a whole lot of setup here. The market did start to come into what a pennant pattern, but is now starting to form what's called a diamond pattern, which is bearish. So I am thinking that the market is leaning more to the downside. The only thing getting in the way of that is going to be this area here at about 99.30 down to about 99.18. If it does manage to break through here, though, I'm definitely looking at the market coming back into support here at 98.60 at the very least, if not all the way back down here to the bottom of the flag pattern. So keep that in mind. On the top side, I'm looking at the market getting at least back up to the $2 level, but more than likely coming into this resistance line, which remember is coming off of the daily bars, which is going to come in at about 2.0050. So let me go ahead and talk about the position I see forming up here. In spite of this diamond pattern, I'm looking at this as a double top, this as a double bottom, which means I'm looking to go short below 99.47. Remember, 99.47, if it does manage to break through here, you've got to watch this area here, 99.30 down to 99.18, with an ultimate target down here of 98.60. On the top side, a break above these two highs here, which is about 99.74, 99.75. So a break above there, of course, carrying up to back to the $2 level. Really, I'm only looking to take about 23 pips worth of risk here based on this major resistance line or support line, depending on which side it's on, and the consolidation zone. So about 23 pips worth of risk on the either way. If I'm going short, I'll be stopping out on about 23 pips. If I'm going long, I'll be stopping out on about 23 pips. Keep things nice and tight and honor this line here as the ultimate decision or arbiter of the ultimate direction of the market. So that's it for now. We'll just have to sit back and wait and see where the market goes.